Hello and welcome to the weekly wrap video. Some quite prevalent themes in the markets this week after last week's ECB rate decision. The euro has in fact softened further, with euro dollar approaching the earlier year-to-date lows. This has also been allied with a lot of sterling strength, as the Bank of England Governor Mark Carney really warned markets that rates could in fact rise faster than the financial markets are pricing in. So Mark Carney really indicating that the argument amongst the Bank of England's Monetary Policy Committee is becoming more finely balanced, with some of these MPC members likely arguing for a rate cut in the coming months. This has led the markets and analysts to really accelerate their expectations for a Bank of England rate hike. So analysts did previously see around the Q1 2015 mark the first point at which the MPC will conduct tightening. This has been brought forward to as early as Q3 of this year, so just a couple of months away. As such, the prospect of higher rates has lifted the sterling currency across the board, with cable approaching levels not seen since 2009, that being above 170. Geopolitical risk elsewhere on the globe has come back onto the table as Islamist militants over in the northern regions of Iraq have progressed gradually south through the country, seizing the second largest city of Iraq, that's Mosul, earlier this week. They do have their eyes on Baghdad, with some reports suggesting that fighting between Iraqi government forces and the Islamist militants is occurring just 30 miles away from the capital. And this is particularly important for these energy markets, as WTI and Brent have been pretty heavily supported here, approaching levels not seen for around 9 months. So that's with WTI above $107 per barrel and Brent actually approaching $115 per barrel. So as a reminder, the Kirkuk-Ceyhan pipeline does run through Iraq and then through the northern border into Turkey. So a pretty critical pipeline, as it links the country's largest oil field to export ports over in Ceyhan on the Mediterranean Sea. Now this has a transport capacity of 1.6 million barrels, so it's really keeping these supply concerns on the table in regards to Iraqi output. Nonetheless, the OPEC meeting earlier this week did cite the Saudi Arabian oil minister as saying that the country is comfortable with covering any offset loss of supply from the likes of Iraq, Iran, as well as Libya. Nonetheless, we'll be keeping an eye on that as it progresses through the week and in fact over the weekend, heading in towards next week's energy market trading. One more final theme worth noting this week is the continued deterioration of US data. We had retail sales populating the calendar, which did come in below expectations, prompting some real further downgrades to GDP expectations in the US. This does come ahead of the FOMC rate decision next week, where we'll get the updated issue of projections from the Federal Reserve. So keep an eye on whether the FOMC themselves also follow suit with these private sector economists in downgrading their growth forecasts. In the meantime though, I hope you have a fantastic weekend, and we'll bring you all those releases next week and as soon as they hit the wires. In the meantime though, that's all from me. Have a great 2 days of break.